Welcome to Multifamily Roadmap. Here's your introduction to multifamily real estate investing to get you started off on the right foot. So let's dig in here. So what is multifamily real estate? Multifamily real estate is just whenever you have a building that has multiple apartments in that building. So it could be 3 apartments, it could be 20 apartments, it could be 100 apartments, but it's just different from your normal single family house, where it's a house you buy with your family, and then it's just one family or one person living in it. You'll have multiple apartments in the multifamily real estate. So what some of the benefits of real estate investing: it produces monthly income, so you collect the rent checks, and then if you do it correctly, you buy right, then those rent checks should cover the expenses, should cover the mortgage, and then still leave you with money in your pocket each month. So it's a great investment vehicle if you want to produce extra income, and then use that income to kind of, if you want to get out of your job, or just use that income to buy more things and increase your income. Another way that makes real estate great is forced and natural appreciation. Natural appreciation is just the market going up. So the value is going up because the market is getting hot. So people are moving into the market, lots of new stuff's going on, more demand, then the value will go up there. Nothing that you do other than just buying in that market. Now, forced appreciation is where you basically add the value. So you get a property that's below value, or it needs renovations, needs better operations, and you fix those things, and then that improves the value of the property because you increase the income, or lower the expenses. So you're increasing the bottom line, and that increases the property's value. So that's kind of a nice benefit because you have control over the asset and you have control over the outcome. Whereas with something with stocks, you're dependent on the CEO, or the company to do good, and then the market to react and put the price up that way. So that's a good benefit of real estate. Another one, plenty of tax advantages. You can lower your tax burden through investing in real estate. You might have heard that a lot. And then lastly, an inflation hedge. So traditionally, when they're printing money, and debasing the currency, making the U.S. dollar, for example, worth less, people notice that, and then they're trying to store their money in real estate that will go up over time and kind of offset that inflation cost. So it's a great inflation hedge that way because they always go up over the long term in price, kind of offsetting that loss of currency value. And there's also another benefit that you can get that relates to inflation, which is the same kind of concept, but you can get mortgages that are fixed. So if your mortgage is $900 fixed for 30 years, each year that $900 is worth less and less as far as purchasing value of what you can buy with that $900, but your mortgage stays the same at $900. So you're theoretically paying less and less each year on the mortgage of the property because the dollar, or the currency, is losing value. And the best probably benefit of real estate that I see is it's easy to understand. People without a big knowledge, or no special skill can get into real estate because people understand that it's a place to live. People pay, you pay your expenses, you pay your mortgage, and then hopefully there's money left over at the end of the month. So it's an easy to understand investment vehicle. Whereas there's plenty of other financial investment vehicles out there that people can't understand. So real estate is something that people get, and you don't need to be some sort of, you know, guru or genius to understand it and make money in real estate. So your traditional multifamily versus single family. Why would you invest in multifamily? One, it's just easier to scale. If you're looking to build a sizable income, it's much easier to scale with multifamily, because you have multiple units under one roof. There's also economies of scale with it. So that's same concept. If you've got 3 units under one roof, one HVAC system, you only have to repair those. Whereas if you had 3 houses, for example, you're putting a roof on each one, you're replacing HVAC on each one, and they're likely need different things to fix maintenance wise, different parts because each house is different. Multifamily also usually has more cash flow than single family because there's multiple units. The rents overall are higher, for that same price point that you're going to pay for them. There's vacancy protection. So in a single family house, if someone moves out, you have to cover that whole mortgage and all the expenses until you place somebody in there. But if you have a multifamily, say you have a 4-unit property, if one person moves out, the other 3 are still providing income for you, so you can still handle the expenses and mortgage, and you're not covering that all out of pocket yourself. So that's a great protection for you. And resiliency in downturns. Multifamily over the history has been resilient in downturns because of just the income that it creates. It allows you to hold through the downturns because of the income uh, that'll pay the mortgage, and then you can kind of wait for prices to go back up. And people always need a place to rent, and the renters are actually growing in numbers. So it's a great asset class if you're expecting a downturn coming up. And then financing flexibility. There's way more flexibility in multifamily versus single family. Ways that you can get financing on the property, ways you can do creative things as far as down payments, terms, all that kind of stuff. So it's easier to finance and just better in that way. So multifamily assets, what you're kind of looking at, small residential multifamily, they typically have the same kind of guidelines as a single family house as far as the procedures to getting it done. And those are 2 to 4 unit properties. That first picture there is a 3-unit property, my first property that I purchased. So you can get the traditional 30-year fixed financing for those that you would get with single family. And most of the procedures of buying the property are similar as well. For small commercial multifamily, you're looking maybe 5 to 10 units. And there's an 8-unit there in the second picture. And you're typically looking for a commercial loan there. There's other creative ways that you can finance it as well, but a commercial loan is typically 5 years fixed rate loan and 20-year term. So it's amortized over 20 years, but at the end of 5 years, then you either have to adjust your rate or refinance it depending on the bank and the lender. So that's different. Usually 20 or 25 years if you're lucky versus the 30-year fixed rate that you'd get in 2 to 4 units. And then larger multifamily, that's 11 plus units. This could be a 50 unit, it could be a 20 unit, it could be a 200 unit property. And for these properties, you can get, depending on the size of it, you can get the same kind of commercial loans as well. Or there's also agency debt from government lenders that'll give you longer term fixed rate financing. But you have to qualify for those, and there's a little bit more that goes into those. So how do you get started? It's pretty simple to get started in multifamily. You got to find an investable area. You always want to have something cash flows, and that's the income after expenses and mortgage. So you want to be in an area that can produce income and put in your pocket. And then another benefit, you want an area that you know well, because knowing the market can help you find great deals and stand out from the rest of the people. You need to understand the business model and key terms. You got to network with other investors, because this is where you're going to find people that can help with the maintenance, people that can find you good property management companies, bring you deals, help you with financing. So networking with other investors is key. You got to get a deal flow, marketing. So you want to do some sort of outreach to find deals that aren't on the market, because traditionally off-market deals would be better. So you want to keep that deal flow going, depending on how many properties you're looking to get. And then you want to be able to spot good deals. So you got to have a good handle on analysis and underwriting of the numbers. And then the last part about it is just funding deals. Where's your capital going to come from? So like the money for the down payment, closing, any renovation, that kind of stuff. Where's your financing? Are you going to use lenders, traditional financing, finding money outside of the normal banking? So those are the 3 main ones: marketing, to find deals, doing the analysis, and then how do we fund the deals? So that's it for kind of the basics. We'll dig into more topics as we go on here. Thanks for joining me.